Hi, this is Andrew Bohnet. I'm in Nevada in the Red Rock Canyon near Las Vegas. Beautiful, beautiful place. Just been up to the Calico tanks. So on our US series, okay, so one of the interesting things that I always find is that in the US, when we're talking to clients and we're looking at their tax solution, so many of the companies that we work with don't understand the requirement when it comes to sort of the consumer use tax side, when they've bought something and had an exemption certificate when they bought it. So maybe they bought it at a resale, but then they take some of those items and they use them in marketing or they give them away free of charge as gifts. The problem is that when you bought those items, you bought them under an exemption certificate, but now you've used them. So the exemption certificate meant you didn't pay any tax. You've now used them. So even if you've given them away as a gift or as a sample or use them in marketing, you should have actually paid the tax on those. So what you need to do is for those items that you've taken out of your inventory and you've actually sold is to actually apply a consumer use tax. So you have to work out how much tax you should have actually charged. You want to do that on the place that you consume those products. So if you're going to an event, ideally, the location of that event where those products were then being given away, that's actually where you need to really charge the tax. And of course, if you were the person giving away, you don't have a nexus in that location. It can be a little bit interesting in how you deal with that. Quite often what we'll do with our clients is that we'll set up within the system a way of being able to, I suppose, use a dummy AR invoice. So you can actually create a transaction and you in effect zero out the transaction amount, but you still have you still base the tax determination on the cost value of that item. So depending on the system you're using, you can do that in SAP, you can do it in Oracle. So in Oracle, for example, it has an assessable value. So what that means is that the tax is actually calculated on the assessable value amount. So you actually calculate tax, but there is no actual transactional amount because you've zeroed it out. And so from a revenue point of view, you can, and the receivable accounts, you can actually set those to hit your marketing or your samples, whichever GL code that you're using there. So the accounting will all work, and then you'll have the tax. Now, the interesting thing, if you use the AR side, the tax will actually be a sales tax that you've generated. So you need to be able to put that on your on the use tax side. But ultimately, make sure that if you are using any of your products that you're in your inventory that were purchased on a resale certificate or any type of exemption certificate, and you then give them away as samples or you use them at an event for marketing, check to make sure that you're actually paying the correct tax, consumer use tax on those.